Hello and a warm welcome to Portfolio Watch. I'm Gugulethu Mfuphi, and in today's episode we take a look at MaaS, or mobility as a service. Now this comes in various forms, be it electric vehicles, autonomous vehicles, in fact anything transport related. To tell us more about the future, which may be a lot closer than what we think, is Andrew Dittberner, Chief Investment Officer for Private Client Securities at Old Mutual Wealth, and Gary Booysen, Director and Portfolio Manager at Rand Swiss. Gentlemen, welcome and thank you so much for joining us today. Let's take a look at this view regarding autonomous vehicles as well as mobility. As mentioned in the introduction, we often think of this as a futuristic theme, which is quite a while from being implemented. But of course, rising trend, solid investment case here, and something that may very soon be a reality, Andrew.
Yeah, I don't think it's that far off. You know, if you think about disruptive innovation at the moment, you know, there's a number of areas, and autonomous vehicles or mobility as a service is right up there, you know, with 3D printing, genome sequencing, artificial intelligence, you name it. I think we're living in a very exciting time at the moment. And mobility as a service, autonomous vehicles, electric vehicles, ride hailing, you know, carpooling, etc. I think it's very, very close. You know, for if you think about sitting in traffic in Joburg, this is my personal views. I think the worst is behind us. I haven't got research to back this up, but I think, you know, traffic from here, traffic congestion goes down with a bit of luck. You know, as I say, it's my views. And you know, obviously flexibility around working hours is one reason for that, but mobility as a service, you know, and if you just drive to work and you look at the car next to you, it's one person in a car. You know, I think we're not too far off from when we'll be able to share cars and there won't actually be a driver, so you can use your time more efficiently by sitting in the car working, reading a newspaper, or looking at Twitter, whatever you might do.
Exactly. Now, car sharing is something that we're quite used to given the likes of Uber, but this theme again of autonomous vehicles and driverless vehicles can be a little bit intimidating, a little bit scary. But you know, when we take a look at the investment case behind it, what is it that companies are doing to invest in this quite adequately? Because we see the likes of Uber investing quite heavily in Toronto. I see upwards of $130 million US, and Fiat Chrysler doing the same thing as well.
Yeah, so it's actually a very complicated space, and it's something that people have been pursuing for over a decade. So Google started originally with its project. It was one of the Google moonshots in 2009. So that's kind of when we started looking at this realistically. And I suppose it was with the rise of Google Maps and suddenly the ability to plot and to, generate data on all the different roadways and have the rise of artificial intelligence, the speed of obviously the processing chips catching up to what they're actually required to do to drive autonomously. But if you look at it, there's a lot that's gone into it, a lot of work that's gone into it, but the investment case, I think, hinges on just the absolute necessity for it. So it's not just about, being able, if you look at, say, blind commuters or the elderly or people that can't drive, that suddenly will have access to, a fairly low-cost transport system, because the second kind of aspect is that the actual transport costs of creating an autonomous car once they're in are probably going to be a lot lower than the traditional cars, because if you've got a human driver behind the wheel, obviously you're slamming on brakes, you're doing all sorts of things, you're accelerating quickly, you want speed, whereas an autonomous mobility system actually comes with a completely different type of vehicle that's actually projected to be lower cost to produce as well. And then finally it comes down to the road deaths. So I mean, they say 94% of US road deaths are caused by human error. Oof. So the problem is that obviously people, as you say, they're very reluctant to adopt technology to put your life in the hands of an AI essentially, and how is that going? How's that going to translate to the public? And there's been all sorts of moral questions about if the car has a choice to kill you or a pedestrian, how do you set it? Must that be set by the person almost with their own controls, saying I want kind of full control to be either selfish or not? So, I mean, there's all sorts of moral questions with it as well. But we're discussing it just before the show. As you build up hours of autonomous driving, it becomes really statistically significant at once you've driven about 8 billion miles. And at that level, they project that it will, at the current sort of trajectory at least, where you've got Tesla kind of coming up to about, if you take what's called their shadow driving as well, and they're using their own fleet to kind of collect data, they're approaching almost 3 billion miles. So when you get to that 8 billion level, there's going to be such a solid case to be made for autonomous driving that it'll be a no-brainer. Like, legislators will not be able to legislate against it, and it'll be almost too dangerous to put a vehicle, and I suppose the whole society's mentality will change to how can we possibly have human drivers behind the wheel of cars? That just seems so insane when they're responsible for so many of the road deaths.
Sure. clearly changing worldviews here. I recall a time when 17-year-olds, the biggest thing in your life was actually being able to get some kind of learner's license or driver's license. But coming back to autonomous vehicles, we often think about from the consumer point of view, right? Sitting in the back seat, being able to read the paper or Twitter and conduct your work as things go about. But there are many other elements here, from the software that's produced to the metal conductors that also need to be implemented here, and even the emotional intelligence that perhaps also needs to be adopted into some of these softwares. How does this build up the amount of companies that actually have exposure to this particular sector for exponential growth?
Yeah, so I think when you think about the investment opportunities at mobility as a service, and it's not just autonomous vehicles. I mean, when you think about what they're trying to, the obstacles they're trying to get over, it's the cost of owning a vehicle. The cost today, if you think, I was just chatting to a friend yesterday, the cost of the entry-level BMW today is 500,000 Rand. I mean, it's astronomical. So I think we're moving away from, and I think it happens over time, that families, currently own 2 vehicles, will, in time probably own 1. I already know of a lot of people that just use Uber to get, to and from work. So it's the cost of owning a vehicle, it's the cost of your time, pollution, and then obviously the safety thing. So there's a whole bunch of aspects that they're trying to get over. And then when you think about the investment opportunities, to come to your question, it's not just the end manufacturer that are going to benefit. You've got to think about the complex supply chains that are coming under pressure. We're going to talk to a couple of companies, I know, but with this trade war, or this ensuing trade war, it impacts a lot of these companies that, as you say, manufacture parts that go into, and this could be radar, cameras, semiconductor chips, which I know we'll talk about. So there's a huge amount of opportunities, but then you've also got to think, who are the losers in this? And when you think about safety, one of the ones that immediately jumped to my mind are short-term insurers. How does this impact short-term insurers if motor vehicle accidents become a thing of the past? That's one of the key, I suppose, revenue spinners for your short-term insurers. So there's your platform owners, your manufacturers. Maybe there's going to become end owners, companies that evolve that just own fleets that are out there driving. They might be a long-term winner. So from an investment point of view, I think there's a lot to think about when it comes to mobility as a service.
Sure. Just very briefly, before we do take a look at some of these stocks and the investment case behind the winners and the losers in this space, we live in South Africa. We know that we have some of the best infrastructure compared to our peers across the rest of the continent, but how realistic is it that we'll see this here in the next, 5 years maybe, Gary? Or do we need to be a little bit more patient?
It's a good question. Looking at it, and you've kind of got to divide it up as well, because autonomous cars in themselves are not the only trend that's happening in the mobility space, because you've also got this huge push into obviously the electric vehicle space as well. We know our grid is very constrained, so it's interesting what the final product is going to look like. We don't know yet. We've got kind of autonomous like kits that you literally just are fixing to Lexuses and various things that there's no reason that you couldn't just apply them in South Africa almost immediately, but I suppose it's going to kind of depend if it's going to be that kind of general Uber service that they're rolling out, or Waymo at least is rolling out a very similar component of that in Arizona, where you're no longer going to own a car, as Andrew said. You're just going to have this giant very low cost taxi service that has no drivers, and you can just hop in it whenever you want. I think that may be a little bit further away for South Africa, but the kind of more Tesla model where you're going to have a sort of level 4, level 5 driver assisting vehicle. There's no reason we can't import that and it would work in these roads. I have seen some arguments just about our line painting. Works perfectly in Europe, but the technology just can't pick up South African road markets. So I think we will have our own challenges as well.
That's interesting. I think it will put one debate to rest, though, the whole debate about who's better drivers, males or females. Hopefully that will finally come to an end. But let's take a look at some stocks now as to which are best inclined to see a solid performance from the investment case regarding mobility as a service. Well, let's get into one of the first few stocks to actually explore, and this time it's a diversified mining counter, Glencore. Usually we think about platinum as being one of those solid metals when it comes to vehicle production for catalytic converters, but clearly Glencore has something else going forward.
Yeah, so when you think about late cycle commodities, Glencore is, produces the most when you compare it to your BHP Billitons, Anglo Americans, Rio Tintos, the other big diversified miners. And late cycle commodities are your copper, zinc, nickel, cobalt in particular. And that goes into, those are key elements that go into your manufacturing of electric vehicles. So it's not to say that catalytic converters, which obviously come from platinum group metals, that they are a thing of the past. We're still going to have diesel and petrol vehicles, I think, for many, many years to come. But if you want exposure to this, up and rising trend of electric vehicles, your Glencore is most definitely the diversified miner that plays to that theme. They've obviously got a number of issues at the moment, or a few headwinds, and I think this potentially comes from the tricky environments or geographies that they operate in. DRC is obviously a case in point, Nigeria, Venezuela, and these are the three geographies that have come into question from the US and money laundering. So there's been some question marks and a possible investigation. They've been subpoenaed to provide some evidence. But this is obviously a bit of a headwind. But when you think of Glencore from 3 years ago, when it was at about 15 Rand a share, today it's at 65 Rand a share. Their balance sheet's looking really good. They're cash flush. They're buying back shares. They just announced last week. There's another $1 billion of a share buyback program, and dividend yield of 4. I think it's about 4%. If you compare it to all of the other miners, these guys are by far the most attractively priced, diversified miner, and got the exposure to that electric vehicle theme.
So we like the valuation. Do we still like the sector, Gary? I recall a time when resource stocks like Glencore weren't always in favor.
No, I think the sector's obviously picked up a lot. It seems to have bottomed. It seems to be the time for the sector. But looking at Glencore, there's a company clearly positioning for the electric vehicle market as well. So I was reading a report. I'm just going to read them off. So to enable 30 million electric vehicles by 2030. Now, to understand 30 million electric vehicles on the road, there's currently about 3 million electric vehicles on the road. There's about 1.1 billion cars in total. So just a tiny fraction of that. We'll need to use 332% of the global yearly cobalt production just to create that. You're going to need to use about 55% of the nickel supply and about 18% of the global copper supply based on the 2017 numbers. So there's going to be an enormous demand for these metals. Now you look at Glencore's profile at the moment, by 2020 they're looking at ramping up 25% in copper, around 133% in nickel and around 30% in cobalt. So they're clearly positioning themselves for these metals. They're increasing production into what looks like increasing demand as well. So I think this is a company that is going to do very well.
Very true. Increasing demand does well for the market price. Market price great for the mining companies.
Yeah,
so
and it looks like that the demand is going to outstrip the supply, but the person that's going to supply it is, or at least the company going to supply it, is Glencore. So I'm right behind Andrew on this pick here.
All right. So a nice one that will certainly wrap up this first half of the conversation on with. That's Glencore, certainly one that's in favor when it comes to the autonomous vehicle space. But do stay with us. When we come back from the break, we'll take a look at other companies like Tesla, Continental, as well as Nvidia. If you want to find out more, you can also get tweeting. You can tweet us at CNBC Africa using the hashtag PortfolioWatch, or SMS or email your questions rather to portfoliowatch@abn360.com. We'll be back right after this. Welcome back. You're still watching Portfolio Watch, where we're taking a look at mobility as a service in various forms. Now, all the rage around autonomous driving as well as autonomous vehicles. But to tell us more about some of the stocks that we're investigating that add to this investment case, I'm joined in studio by Andrew Dittberner, Chief Investment Officer for Private Client Securities at Old Mutual Wealth, and Gary Booysen, Director and Portfolio Manager at Rand Swiss. Now, just before the break, we did touch on some companies which obviously play to the value chain of the investment case within the mobility space, and Glencore certainly stands out as one, and Hulamin, a local company also based in Pietermaritzburg, also features on this particular list. Do we like it? Do we own it? Should we buy it?
Yeah, so Hulamin's not one that's, I think, often spoken about. At PCS, we don't own Hulamin. It's a fairly small cap. I think it's about 1.5 billion market cap. So it's a fairly small business, but it's a very interesting business in that it provides a very key component to one of the biggest electric vehicle manufacturers, being Tesla. So the battery box plates, they've got the contract to supply every single Tesla. It's battery box plate, which is a lightweight, heavy. It can withstand heat, large weights, and obviously you can understand the weight that goes into an electric vehicle from a battery point of view.
Sure.
So they're the only manufacturer in the world that produces this component that goes into a Tesla. And as you mentioned, they're based down in Pietermaritzburg. From a mobility point of view, they're also manufacture a fitting that goes on the top of aircrafts where the satellite dishes sit under to provide Wi-Fi to the aircrafts. So they also, one of the only companies in the world that can produce this fitting. So from a mobility point of view, quite an interesting, little story, I suppose, around a local or, a local business.
Exactly. It comes as a great surprise, especially given that we don't think that a lot of these innovative technologies come from South Africa. But if you look at Tesla, look at Elon Musk, the connection with Hulaman, clearly there's a bigger story here. But what's happening with Tesla? Because it just seems to be this juggernaut of an innovative firm here, hey? Andrew?
Yeah, when you think of Tesla, you obviously immediately jump to Elon Musk, the CEO and now ex-chairman after this weekend, given the investigation by the SEC. But Elon Musk himself, before we even speak about Tesla, he's trying to tackle all the problems that come with mobility. When you think of pollution, electric vehicles, autonomous driving, congestion, the Hyperloop. He's got the Boring company that's digging tunnels in California to try and move away from traffic. So here you've got one guy that is trying to solve all of these problems. And listening to him, he's love him or hate him. I think he's one of these people that you either really buy into his vision or you think he's absolutely mad. And maybe watching some of his recent podcasts, you might go the one way as opposed to the other. But what he's doing with Tesla is nothing short of amazing. And when you look at the autopilot, I was just watching a video of the Tesla autopilot. You ask how far away is autonomous vehicles? There's a 2-minute video of this car that drives through the streets. Stops at stop streets, stops at traffic lights, parks itself. There's a function where it will take the car out of the garage for you, park it in the garage for you with no one in it. And when you think of other vehicle manufacturers, what do? Every couple of years, they're giving their cars facelifts or they're redesigning their cars. But when you come to a Tesla, what is their selling point? They upgrade their cars by upgrading the software. And he says, every single Tesla car that's even sold today will have the autonomous driving function in a few years' time because they just upload the software. The Teslas look exactly the same as they did 5 years ago. So it's a fascinating story. We also don't own Tesla. It's as I'm sure many people know, it's not yet profitable. They've got a number of issues, and many people say it's a pyramid scheme waiting to collapse. Other people say when it gets to profitability, it is going to shoot the lights out. Sheesh. It's going to be interesting to see which way it goes.
Which could be this quarter, according to Elon Musk. It all depended on what they did on Sunday. so we'll see. But Tesla, Andrew's covered it well, but certainly a very, very exciting company. And I think, that podcast with Elon Musk, that's not the true Elon Musk. You just need to go and look at the earnings calls to know that there was, there was something very different about that Joe Rogan podcast. But
we're going to find it.
But you look at it, you look at what Tesla's done, and Andrew's right. They're kind of attacking all the problems at once, from electric vehicles to autonomous driving. And it's interesting because, obviously mentioning the way that they do it, they've had to actually redevelop the whole way that cars are built because they thought they could use all the kind of extra parts and bits and pieces from a traditional combustion engine. You can't. The whole drive chain is different. The whole way the car functions is completely different. And obviously they've got the big focus on now becoming profitable because that's what a real company does, and they have to kind of prove, I think, to shareholders that they're financially stable enough to continue with this amazing vision that they're pursuing. But you kind of look at the technology that they've managed to develop. They've got they're leading in terms of battery technology. You look at also their the actual chips that they're using. So they were using the NVIDIA chips previously, kind of very stealthily for 3 years developed their own chip and came out and said, these GPUs are actually not going to work for what we're doing. The kind of relation between the CPU and the GPU doesn't work. We've built our own chip, don't worry about it, it solves the problem. So there's incredible engineering expertise inside Tesla that has been demonstrated. And it's difficult, again, we also don't own the company. I've never owned the company, but I listen to all the earnings calls and I think they're absolutely fantastic, especially when Elon Musk is abusing his institutional shareholders, analysts. It's fun to watch, and it's, he's a very entertaining CEO. I suppose he captures people's imaginations, but you kind of look at the fundamentals of the business, and it's very, very difficult to go and put especially client money into it because it's very risky. But you can't deny the excitement the passion with which the Tesla employees go about it, and the technology that they have developed. I mean, these cars, every time Elon Musk, kind of comes out with a crazy prediction, I mean, yes, sometimes they don't meet. It's, the alien dreadnought, that he was talking about, this huge automated machine. Maybe that didn't come off because they've now got the Giga tents, sitting outside the Tesla factory, trying to ramp up those.
I'll tell you what, clearly you know a lot about Tesla for someone who's not investing in it.
Yeah, but I mean, it's a fascinating story. I'd really advise anyone who's kind of interested in just business in general, go and listen to those earnings calls because they're absolutely fascinating.
But you mentioned two companies that are also connected in some kind of way to the mobility story, and that's NVIDIA, who again are players in this particular space and competitors, as you alluded to. Tell us about their investment case, and also when you look at Tesla and other elements regarding software developers, Google, way more. I understand that there's also quite an interesting play taking place there.
Yeah, so if you look at NVIDIA essentially came to market. NVIDIA was a chip company. It's and essentially people probably know NVIDIA from gaming chips that you plug into PCs. But obviously there was a huge application when you need the processing power to develop kind of the AI systems that go into autonomous driving, and they have really positioned themselves for that, and very, very successfully. So we've seen an enormous ramp up in NVIDIA share price over the last couple of years, and they've got really major clients on board as well. So I mean, Continental, Bosch, Daimler, Toyota, VW, all using their technology, which is kind of interesting that Tesla just technology doesn't work or make our own. Exactly. But you look at NVIDIA, they've really, again, it comes down to the hours when you're testing like autonomous driving software. I mean, you can't just go and stick it on and run it on streets. You've got to have this whole environment for kind of training your AI, testing your software systems, and that's essentially what NVIDIA has built up with NVIDIA Drive Constellation, which is it's kind of a whole development environment for people that are building autonomous driving technology, and that's why they've managed to sell into so many major brands. And it is still a very exciting business in that sense. I mean, we've owned NVIDIA for a long time. We're not currently holding NVIDIA, so we have sold out of it, but it's one of the ones that really has made a huge impact. I mean, you're talking about they're already in 120 million vehicles, like their chips. So
one that we clearly like, yeah.
I think what just listening to the conversation, what becomes very evident is the integration of the global supply chain. When you talk about Hulamin, Glencore, Hulamin plays into the Tesla theme. It manufactures a part. Tesla's in NVIDIA's. That NVIDIA supplies chips to Continental, which is another company which we can talk about. But it just highlights this integration. And when Trump starts talking about global trade wars, it's not as simple as China exporting goods to America, because it impacts where goods are flown right throughout the world, which I think is just talking about autonomous vehicles, electric vehicles, it's very, very clear.
Yeah. Speaking about all this innovation that's coming through from many of these companies, it's interesting to often think about that saying, don't reinvent the wheel, because tires will always be something consistent, right, to vehicles, even as autonomous as they might be. And I understand that this is where Continental actually plays a part.
So Continental, it's a company that we hold. We've actually spoken about it before on the show, I think, and it's not, everyone just jumps immediately to the tire, the rubber business, and it's a hell of a lot more than just the tire business. As was mentioned earlier, they manufacture parts that go into these autonomous vehicles, these electric vehicles, whether it's the safety, safety systems, etc. Your systems that sit on your dashboard, etc. So it's a hell of a lot more than just a tire manufacturer. If you want to see the impact of trade wars, go and look at what Continental's done. They do have some of their own headwinds at the moment, admittedly, but I think the trade wars have also, or the threat of trade wars rather, has also put the share price under quite a bit of pressure. But again, you don't need to go and buy the manufacturers to get exposure to this theme. You can buy, the part component manufacturers rather.
And buy that independently to get that exposure. As we do wrap up though, I want us to pick on a company which many of us have probably forgotten about, BlackBerry. How does this feature in the autonomous vehicle space?
Incredible, and they're calling it, I suppose,
is this the rebirth of the
it is. Yeah, so they're not exactly selling phones anymore. BBM Messenger and pinging, it's not what they do. They're all about kind of enterprise development and management. But what it is, it's the QNX security software, and that's what they've developed. And I mean, the new CEO has firmly put them in place that this is the technology that they're developing. And they've already got major clients, in the autonomous driving vehicles to implement these systems. And it's all about kind of managing the cockpit. So again, talking about kind of the integration that these companies are having to do. I mean, to get the world's fleet to an autonomous electric vehicle fleet, it's far more complicated than putting a man on the moon. you've got all these different companies that are playing a role, and the role for BlackBerry and the role BlackBerry's trying to carve out for itself. I mean, it no longer makes smartphones. It uses third-party hardware providers. It's to run the kind of infotainment system inside a cockpit, from kind of changing the way that the audio works in a car so that a driver or someone sitting in the front of a car can be heard by someone in the back of the car, all the way to kind of trying to get your Google Maps to integrate with this chip, which integrates with all the other the cameras and LiDAR sensors and all that. That has to be managed by one kind of software, and QNX, which is a BlackBerry product, is the leading software in the industry. So it's a company. It's kind of the big overlooked play, I think, at the moment, because you haven't seen a real recovery in the stock price, but they've already announced that their turnaround is now completed, and that it's time to start growing the top line again. So it's a weird little play that you wouldn't think of, but actually is a fairly big player in the autonomous space.
Sure. Some interesting companies that we've touched on, gentlemen, and I think you've given us a lot to think about and, of course, investigate when it comes to the mobility space and autonomous vehicle space. A big thank you to both my guests this evening, Andrew Dittberner, Chief Investment Officer for Private Client Securities at Old Mutual Wealth, and Gary Booysen, Director and Portfolio Manager at Rand Swiss. And, of course, thank you for tuning in. Hopefully, we've given you quite a bit to consider when it comes to your investment case around mobility. Now, do remember to keep your questions and suggestions coming in by tweeting us at CNBC Africa using the hashtag Portfolio Watch, or email them to the show, portfoliowatch@abn360.com. Until next week, have a wonderful evening further.